Hello and welcome once again to Tuesdays with Lloyd's. My name is Pat Talley, Regional Director and Managing Agent Practice Group Leader for Lloyd's in the U.S. Today, we bring you the latest installment of our special Syndicate Showcase series, a monthly profile where we welcome senior executives from a syndicate's leadership team to share their perspective on a variety of topics: market conditions, their U.S. footprint, forward outlook, threats, opportunities, and a host of others. It also provides an excellent opportunity for our audience to ask the leadership team questions during our Q&A. Since we began the showcase last year, we've profiled Hiscox, Apollo, Aegis, Ascot, Munich Re, Hamilton, Atrium, and MS Amlin. And today we are very pleased to welcome Canopius, which operates Syndicate 4444 at Lloyd's. Joining us from Canopius today are Lisa Davis, Chief Executive for the U.S. and Bermuda; Laurie Banez, Head of U.S. Management and Professional Lines; Jennny Soubra, Head of U.S. Cyber and Technology; and Utsav Ratra, Executive Underwriter of Financial Institutions. We'll drop a biography for each panelist in the chat box. As always, we encourage you to submit questions for our panel. Just please use the Q&A tool instead of the chat box. All of our sessions are streamed live on Lloyd's YouTube channel and are recorded to allow future viewings on demand. Mark will drop a link to the channel in the chat box, and we encourage you to share it with any colleagues and clients you think might find these sessions of interest. And with that, Lisa, Laurie, Jennny, Utsav, welcome to Syndicate Showcase, and the floor is yours.
Thank you, Pat. Thanks for having us today. And as we do this again, mostly via Zoom, I did notice that they're mowing the grass outside my window. So hopefully you guys will be able to hear me okay. They always pick the most inopportune times. But again, thank you for having us today, and look forward to telling everybody a little bit about Canopius. So I thought I might start a little bit by talking about the history of Canopius. And for me, my role here as Chief Executive of the U.S. and Bermuda operations, I've only been with Canopius about 18 months. So it was quite fun for me to look back and kind of look at the history and go through sort of a timeline of some of the things that have happened at Canopius over the past 20 years. So what I found was that in 2003, Canopius Syndicate 4444 was originated through a management buyout of Trenwick and started in 2004 with a stamp capacity of 230 million. And throughout the past 20 years, we have grown to become a top 10 syndicate with Lloyd's, finishing at around the stamp capacity of around 2.1 billion in 2021. So I thought it might be fun to just kind of walk through a little bit of the timeline of some of the things that have contributed to that growth for the syndicate within Lloyd's. In 2007, we started a Bermuda operation. In 2008, we expanded into Asia in Singapore with Canopius Asia. And then in 2012, we made our first foray into the US market when we purchased the Omega Syndicate. And with that purchase, we also acquired a US E&S company located in Chicago. And so that was really one of our first opportunities to actually physically have people in the US. And then in 2014, we formed Canopius Underwriting Agency, Inc., headquartered in New York. We started off by writing property for the syndicate within that operation, and then expanded that in 2016 to include ocean, marine, and management professional lines. And then in 2019 was really when we took our step into the top 10 at Lloyd's when we purchased AmTrust at Lloyd's, Syndicate 1861. So since then, we've kind of continued our trajectory in London, as well as Asia, and also in the US. And thought it might be good. I've skipped a whole bunch of different things that happened. There's quite a few that have gone on in between 2003 and today, but I thought these would be ones that would give you kind of a good idea as to who we are. And also, you know, one of the main things we want to do today is sort of put a shine on our US operations for those of you who don't know about what we're doing in the US. But over the past 20 years, we've spent a lot of time growing the operation. In 2022, Michael Watson, who was Chief Executive Officer, became chairman of the organization, and Neil Robertson came in as CEO, and he will continue to look after the growth of the syndicate over the foreseeable future. So thought I'd start out really quickly by, you guys probably know a lot about Canopius via London and kind of what we do in the London market, but maybe people don't know that over the past 10 years, we've been quietly and slowly building out a specialty underwriting operation in the United States. We've seen significant growth in the past couple of years and a lot more on the horizon. So we thought we'd spend today kind of giving a little bit of a shine and a showcase to what we're doing in the US. So what I'd start with is saying that I mentioned we have two entities in the US. We have Canopius Underwriting Services, Inc., which is an E&S company licensed in all 50 states. We're currently writing property, liability, motor, surety, and some niche markets through a limited distribution of MGA partners. And we also have Canopius Underwriting Agency, who writes on behalf of Syndicate 4444 and writes cyber business, property, management professional lines, and ocean marine. And one of the things that's really amazing to me when I think about it from my start, sort of mid-pandemic in September of 2020, is that we've grown our staff by more than a third over the past year, year and a half that we've been here. And we now not only have an operation in Chicago and New York, but we have teammates scattered around the US in San Francisco, Chicago, Atlanta, and other cities. So we're really continuing to get a nice footprint across where our business is written within the US. And the other thing I thought would be nice to mention is that in 2021, we finalized an arrangement with our strategic partner, Samsung Fire and Marine, for our ocean, marine, and management professional teams to write on their A+ admitted paper. And this really complements what we write through our Lloyd syndicate, and it offers our syndicate access to insureds that we wouldn't have access to if we didn't have this admitted paper. So really exciting times, continued growth. You'll see more and more from us over the next several years around the importance of our US operation. So today I thought we'd spend a little bit of time talking about a couple of lines of business that not only are really important to Canopius, but also really important in the marketplace right now. So I'd like to start now with Jennny Soubra, who is our US head of cyber. And Jennny, thought maybe you could start us off by giving us some views on the current cyber market and any changes to the threat landscape that you're seeing today.
Sure. Cyber market is extremely hot right now. To say that there's a lot going on is certainly an understatement. Just by way of background, the US market currently represents 90% of the global cyber market, and that's inclusive of UK placements that account for about a third of that. Penetration levels, still moderate, even though the market's been growing. Lots of room for growth. We're seeing penetration rates across the board at about 40%. But given everything that's happening in terms of the threat landscape, we're seeing a rise in cyber purchases, not just for large organizations, but across the board. So SME space, middle market as well. We're seeing VC-backed insurtech MGAs entering the market at what seems like an astonishing rate. They're focusing more on the SME space, using technology, automated box underwriting to quickly scale and capture up that portion of the market. On the threat side, we're seeing clearly an uptick in ransomware attacks. We've seen kind of a shift from the traditional data breach of approximately 10 years ago to more of a focus on the ransomware attacks, including attacks on the supply chain, zero-day software exploits. We're seeing state-sponsored attacks, and just a general rise in cybercrime, including criminal-on-criminal cybercrime, where they're jacking crypto from each other. Threat actors have kind of expanded from big game hunting, where focusing on large organizations that might have a large cache of healthcare, financial, or otherwise personal information to more of a scattershot economies of scale approach, seeing how many individual machines can be impacted in one shot, looking at greater volume of smaller ransoms, more affordable ransoms, if you will, in order to obtain various forms of extortion. All of these things combined has created a hard market. We're expecting these conditions to flow through 2022. We're seeing competitor exits, constrained reinsurance supply. However, I do feel that there's hope on the horizon. We've seen recent increased law enforcement activity, increased government involvement, cyber criminal takedowns, as well as ransom clawbacks in these ransomware events. And so from that perspective, the increased involvement does give us hope that there will be a tampering down on the criminal activity. We're also seeing a potential regulation of cryptocurrency from the SEC. We're seeing signals from that perspective as they're partnering with various technology companies to regulate the crypto, which ultimately will have a downstream positive effect for people in cyber.
Wow, what a change in the landscape over not only the past 10 years, but really the past 2 or 3 years. You talked a lot about some of the there's a lot of difficult times out there for a lot of different places. Are there any specific things that Canopius is doing in sort of responding to some of the changes in the horizon and that sort of thing?
Sure. We take an individual as well as a portfolio underwriting approach. So when we're looking at an individual risk, we are taking a careful look at ransomware controls, specific mitigating controls that the insured may have in place, as well as looking across the board for a portfolio perspective. We want to have a diversified portfolio, not only in terms of size of account, but also in terms of industry as well. I think across the board, insurers in general have been increasing scrutiny on cybersecurity controls. It's kind of driven a technology transformation on the insured side, where they realize if they don't have these baseline controls in place, they've almost become uninsurable. From a broad market perspective, we're seeing insurers changing underwriting strategy, restricting capacity deployment, where they used to offer a 10, now they're offering a 5 mil in terms of capacity, and they're narrowing coverage as well, introducing co-insurance provisions around ransomware and extortion. Specific ransomware strategies are in place. And so overall, I think that the threat landscape has driven positive changes, both in terms of terms and conditions on the insurer side, as well as controls on the insured as well.
Great. Thanks for giving us a little bit of overview about that. The cyber team within Canopius in the US has really only been around since 2019. Can you tell us, even a little bit more about the Canopius philosophy for cyber, how the US and the UK interact, sort of a little bit about, maybe the differences between the operations as well as the similarities?
Yeah. So we have a global team. We've got 12 teammates based in the UK and then in the various regions in the US. And we are one unified team. We're one single P&L. We have a single underwriting philosophy. We have a single view in terms of pricing. And so we have a very coordinated and complementary approach between the US and the UK team. We've got a comprehensive suite of products that we offer both all around the world and in the US market as well. Tech E&O, cyber, all of the first and third party coverages within that. We also offer a non-physical business interruption product and also personal cyber. And so the way that we're set up, we have regional underwriting authority. It facilitates the ease of doing business with all of our partners in any region around the world. And the US is focusing primarily on large middle market segment, but of course, any business that's not brokered to the London market as well.
Great. Thanks, Jennny. Really appreciate those insights on cyber. And it does appear that the line of business is sort of moving and shaking and lots of changes happening on a regular basis. So hopefully we've been able to provide a little bit of insight into that. But if you have other questions, please feel free to drop them in the chat or the Q&A, Pat. That we can answer at the end. So thought now maybe it would be a great opportunity for us to talk about another sort of fast growing line, both for Canopius in the US as well as the marketplace sort of fast changing line. And with that, I thought, Laurie, I'd like to ask you a little bit about the management professional team within Canopius that's really been around since 2016.
Sure. Our team actually, as Lisa has clearly shown, joined almost 6 years ago. We've been operating now and growing year over year considerably, not only from a gross written premium perspective, but also from our team perspective. We've doubled in size in the last year and looking forward to continuing that growth. Our team is very diverse, very experienced. Many of them have lived through multiple cycles in this segment, and many also are newer. So we have a variety of people that bring diverse experience, diverse knowledge, a diverse amount of talent to our team in order to respond to the insurance questions being asked today.
About that, the joys of mute on and off with Zoom. So thanks, really appreciate that. And I think I sort of alluded to it in our original in my original sort of opening about the talent, as you said, that we've really grown within the US and the management professional lines. But I thought it would be a really nice opportunity for you to describe, sort of the products that we write within the unit in the US, as well as kind of what maybe is our sweet spot for our appetite.
Sure. The team itself is extremely diverse from a product knowledge perspective. And as a result, we offer multiple different products: directors and officers liability, fiduciary liability, employment practices liability, all the various professions, lawyers professional, accountants professional, miscellaneous professions. And then we also have experts on the team that focus specifically on financial institution risks. So we have the tools in our toolbox in order to address these specific questions and these types of risks. The issue comes down to more of, specifically as this market is evolving and the newer types of exposures that are being discussed very widely in the marketplace, such as SPACs and de-SPACs and IPOs. Our team has the experience to handle these types of risks. We have significant experience, both, as I mentioned, in the FI segment, but also in the commercial segment, and really understand that transactional risks need a little bit more understanding and time when considering participating on these risks. Specifically with regards to these products, we also are interested in a variety of markets. So we focus on commercial as well as financial institutions, but looking at the type of risks that we do best at is really related to the middle market, to the Fortune 500 type risks. And right now, while we're still developing our product portfolio, we are primarily addressing the excess market, but we can participate. There's no minimum attachment. There's no minimum type of size, other than we're not really your market to consider for SME type business. We just don't have the ability to handle the volume those types of risks bring in. But we've had significant success on traditional exposures as well as the more difficult transactional. How we like to describe ourselves is more that we like risks that are traditional, but yet have some sort of twist to them. We understand that we're not the legacy carrier. However, we're not a new market. We are, 6 years in. There are many new markets now. It's evolving currently. But we do feel that we have the strength and the knowledge and the team experience to be able to handle these difficult type transactions, and we take the time to individually underwrite each risk. We do not box underwrite. And I think when we're looking at how we feel, how we view ourselves, as well as feedback that we've received in the marketplace from our brokers, is that we take the time to listen to what the insured's needs are, but also take the time to understand what that transaction might result in. So yeah, I think that probably we're very successful on those types of risks that have that different little twist to it that takes a little bit more time to understand.
Thanks, Laurie. I think, you talked a little bit about new entrants and existing entrants and legacy entrants and that sort of thing. As you mentioned, we've been around since 2016, so we've kind of taken our time really entering into the marketplace. And so I think you alluded, as well as we feel like we're in a really unique position because we're flexible and small enough to be able to really meet the needs, but we're also not we don't have a huge amount of infrastructure that we also have to, maneuver through, I guess I would say. I guess one of the questions I'd like to ask a little bit more detail on is around differentiation and sort of, you've alluded to the fact that we underwrite every risk and, we really do spend time with that, but maybe you could spend a little bit more time talking about how we like to differentiate ourselves between markets and new entrants?
Sure. When you look back historically, 10 years, 12 years, 15, 20, however many you want to look back, many times new markets, when they entered, it was, what additional coverage are you giving me in order for me to be considered a distribution partner for you? Right now, it really comes down to customer service. Our differentiation is our ability to respond. And we've gotten positive responses from our brokers that we pick up the phone, we respond. It might not be the answer that the broker wants to hear, but it helps the broker understand where we can help participate on a tower of insurance or where we can possibly help in other opportunities. So it really is all about communication. The other aspects is really, we don't box underwrite. We look at each one individually, and that is key in this marketplace, because if you just say a SPAC is a SPAC is a SPAC, that's not the case. You have to understand the risk associated. And I just use SPAC as an example. But if you look at a D-SPAC, you look at an IPO, you look at a private equity firm, you look at a bank, every risk has its own individual exposure for consideration. And we take the time to drill into that exposure to understand what the client needs and understand and ask questions. It's all about asking questions and getting that response. When it comes to other areas where we feel that we can differentiate is we offer a consistent message. So we've been operating for 6 years. Many new carriers go into a market and they have to pull back, change terms, change their appetite. We've not changed our appetite since opening the door. We may change our ability to participate down lower in a tower, but we are still underwriting the same types of risks that we wanted to underwrite from day one. We look at employment practices, we look at fiduciary, we look at lawyers, professional, accountants. Each one of those areas of exposure are areas that we continue to want to participate. We are not pulling back. We're not re-underwriting. And that's something that we feel is strong in the marketplace, in that we're consistent in our message and we're consistent in our approach.
Great. Thanks, Laurie. That's really helpful, actually. I feel like every time I listen, I learn a little bit extra every time as well. So before we do have some questions, and some of them are specific for you, Laurie, but I think we're going to hold off. The one thing that I wanted to do before we got into sort of a Q&A was I mentioned early on that we have grown our employees and our teammates by more than a third just in the time that I've been here. And actually yesterday, speaking with our HR leader here in the US, she said, I just closed out 3 jobs and you just gave me 3 more. So we're going to continue to grow out our operations in the US over the next couple of years. And I really feel very strongly that our people are our most important asset. We couldn't do any of the things that Jennny described or Laurie described without the people. So I wanted to ask Utsav to spend a little bit of time kind of talking about, sort of a day in the life at Canopius. And I think it's really important because he's really only been with the company for a little bit under a year, or maybe right around a year. So it's like the full gamut is, fresh in his mind. And maybe you could start a little bit about talking about like the interview process that we go through, and maybe a little bit around the onboarding as well. So Utsav, I'd love to hear from you.
Absolutely. Yeah, I really appreciate the opportunity first off to speak on this concept, this topic of culture. I'm currently in our New York offices, and I'd love to have the skyline in the back. It's a very bright day here, so unfortunately the lighting conditions don't warrant it. But it's been obviously quite the year as we've continued to progress and been quite a tough environment from the pandemic standpoint, what we're seeing around the world these days. But I think this concept of what is culture is extremely pivotal. You mentioned the people focus and how we interact with each other, which prior to 2020 was, I think, a much more easy opportunity to find that fit, to be able to meet people in the office and to have those personal relationships built just around the day-to-day that you go throughout. But from my perspective, having joined right at the beginning of 2021, I had to rely upon my interview process and just really get a feel in conversations such as what we're doing today. And hopefully, we can continue to go and move beyond that. But to that end, it's finding that fit, that feel right away in a manner in which you're not spending just the time talking about what the technical skills are. Although that was extremely important to me to showcase my skill set, I was able to have conversations about who am I going to be working with? Where do they come from? What are they looking to achieve? The manner in which they want to achieve their goals. The concept of culture is no longer a buzzword, if you will. It is how we operate. And from my perspective, and although it was a small sense of it, and you're taking a bit of a leap in doing so, I got that good feel right away, where I felt that I was going to be given an opportunity as a relatively young professional to dive right in, but to be able to have conversations on a rolling basis, even from my home, even in an environment that's not necessarily conducive to having those interpersonal relationships built, because of the manner, the focus of that interview process. And so, although I've continued to build through my professional career here, I think if there is a silver lining, looking back across the past year, being able to have those challenges, meeting those challenges, and to be able to rely upon my senior leadership and my colleagues and ask about them. Laurie alluded to the idea of diversity. We don't like to black box the idea of diversity. Diversity truly is different experiences across the board, from a professional standpoint all the way to a personal standpoint. And to get a small piece of that feel right off the bat in my interview process, and then to actually be able to go through all that, it's been a lot to take in, but I'm very happy about the decision to be able to, just being able to have the opportunity to speak today is a big piece of that.
Yeah, it is. I love to hear the excitement, and I sort of have some of the same experiences, given that I joined kind of in the middle of the pandemic as well, and found myself, really trying to build a culture through Zoom and through Teams, which has been a challenge, but I think it's also really helped us to learn how to work differently than we've ever really worked before. And you made the comment about the leap that you made. And it's funny that you use that term leap, because when I was making notes and thinking about, how I wanted you to talk about this, I made the comment of the leap that you made. So you made the leap, and you based it a lot on an interview process that was done totally differently, probably than any other job that you've ever had. How have you found it? How have you found things in terms of the way Canopius is working in the U.S. in these times, that are very different than what they were a few years ago?
Absolutely. I think it's leveraging what we're accustomed to, an environment in the office, but recognizing that there are pieces that we can take from the lessons that we learned over the past year or two, that we continue to bring forth. The efficient manner in which we work on a day-to-day basis is extremely important. And we're not missing a beat if we're working over a Zoom environment or a Teams environment. I think one very key aspect for me, and I think my colleagues would attest to this fact, is the fact that prior to joining, everything was done over a phone call. And of course, we were still adjusting, but you can sort of sense, how you mentioned, the excitement. This is genuine. For me, this is a response that you can see in the way that I react to the questions or how I want to talk about these things. These are lost when you're not able to have these conversations in the office. But the fact that we were able to adjust on the fly in an environment that no one had ever experienced before, to be able to rely upon our technology, to be able to get access to a service machine like I have access to today, and then continuing to as we can move forward, and as hopefully as the things are continuing to clear up, and I'm able to be in the office today, but to be able to draw upon what we've learned over the past year, and then go back into what we've been doing prior to that, and finding those efficiencies, finding the most effective manner in which we can operate. I think it lends, it's just so important to everybody these days. It's that cultural fit. It is a prime decision factor. It's not just about what you brought to the table from a technical analysis standpoint, if you're an actuary, an underwriter, but how do I coalesce with my team and with the company as a whole? And to see that we've been working on this on a rolling basis, it's only going to lend itself to our future and achieving our goals.
Thank you, and thanks for sharing that. I know that that's something probably a little bit different for folks that are watching today, to have us really, focus on culture and people alongside the business. But I personally, and we as a syndicate, feel really strongly about the importance of building that culture and having the best people, because it helps us deliver the best outcomes for our clients, for our company, for ourselves. And by doing so, we really feel like this, this is a really important piece of not only who we are personally, but who we are from a business perspective. So I appreciate that. And maybe in the effort of not being completely self-serving, maybe you give us like a 1-year report card, something, just to make everybody smile. How have we done 1 year in?
Yeah, I think that, I definitely want to make sure that it's not just about, the Canopius way. I think ultimately it's recognizing that over the course of the year, the difficulties, there will be there. It's not going to be a smooth process. There are going to be days where it becomes more and more difficult to operate from a virtual standpoint. And I think what's key in that and dealing with those challenges is, one, recognizing them, and to be able to, in some way, shape, or form, have an open forum to discuss them, to say that things aren't always going well, to say that we need to do better. And so while I will say I've had a very, promising first year, a little bit more than 1 year at this point, and I'm very much looking forward to the future, I'm not resting on our laurels, and I don't think anybody on the team is either. I think as we transition into a more hybrid environment, there will be times where it doesn't make a lot of sense to do one thing or this way or that way that we did prior, and there will be challenges adjusting. But just to have the conversation is key, and that's not a Canopius thing. I think that is just the way that our industry should function. To be able to rely upon each other here and to have the conversations even outside of our syndicate alone is very important, just to continue progressing forward.
Thank you. And thanks to everybody for providing us some insights today. And hopefully those who joined us have learned a little something about Canopius that maybe you didn't know before, or just maybe in a little bit of a different fashion. So I think before we wrap up, Pat, we do have a few questions, so I can try to go ahead and get some of those out there. A couple of them are for Laurie. One would be, could you give us a definition of what SME means to you?
Sure. SME actually is small to mid-market enterprise. So it is a small company that really is small in revenue or just starting up. That is a volume type segment of the business that is better handled with other carriers. So it's an area that we just feel that we can't support at this time in our development.
Couple other things around the management and professional lines that we'd like to try to get you to answer. Are D&O claims growing outside of the U.S.?
So D&O claims are growing everywhere, but U.S. is primarily the driving force in that segment specifically. And we do have the ability to support those risks based in other jurisdictions where the primary exposure is still the US. So we do stay on top of those types of issues. But from a growth perspective, yes, they are growing on the claims count. But the severity and the claims count from a US comparison, the US still is the leader in that segment. Not that the US wants to be, but it is definitely the leader.
Great, thank you. One other thing I wanted to ask, maybe that I've seen come up on the questions, maybe both to you and Jennny, is around the claim process and how does Canopius sort of look at the overall claim process for each line? Maybe Laurie, you could start with that, and then Jennny, we'll move on to you.
Sure. We use currently a third-party administrator to help us in the US with our claims. They are called ARIA Services, and they have an extremely strong presence in the management and professional lines. They are a specialty TPA formed to address specifically management and professional lines, and they've been in existence for more than 10 years. When it comes to collaboration, though, we work very closely with the TPA, and then the TPA has a direct relationship with our London claims operation to ensure that specific issues related to claims reserving, any sort of coverage issues, are the London operation is deeply involved.
Okay, thanks. Jennny, could you kind of go through that as well? And I also have a few additional questions as well to ask you about cyber.
Yeah, sure. So we have an internal claims team. Our global head of claims and several claims team members are sitting in London. We have a little bit of a different approach between the UK and the US. So in the US, we do have an attorney that runs our breach hotline that affords us attorney-client privilege for our clients and actually the entire claims process, which is important in the US. As Laurie mentioned, we love suing each other. It's America's pastime, it's not baseball. We love suing each other. So we need to have the entire process protected here in the US. We have a TPA that works closely with our claims team for UK business and then also rest of world. We have risk management services available as well, both on a pre-loss mitigation services standpoint to help our clients kind of bolster their security, provide training for both executives, their employees as well as our post-breach response. And so all of the different areas where somebody would need services in terms of forensics, business interruption calculations, notification, call centers, credit monitoring, anything that would be required to respond to a cyber incident, we have our own global vendor panel in place. So we have global service providers that can operate anywhere in the US, but we also have regional providers as well that will operate in individual countries that speak the language. And some clients just prefer to have somebody that they can meet with face-to-face rather than handling the incident virtually.
Great. Yeah, I think it's something we hate to talk about because we, as insurance companies, don't want to have too many claims. But at the same time, we recognize that in a lot of cases, it is the client's first and only specific access to us. And we find that to be really important. So really robust processes that we use for those two tough lines of business. A couple other quick things, Jennny, for you, a very specific sort of appetite question that came through, which is, can you consider tech and cyber for tougher risks? For example, MSPs, if that risk is about 33% or less of the exposure. This one sounds really specific. Or maybe a more general would be, can Canopius get creative on tougher risks? Maybe a better way to look at that.
Yeah, and I can answer the specifics as well, but we have a very broad appetite. We can write tech standalone, cyber standalone. In most cases, they're written together. If there's some ancillary miscellaneous that is part of the tech service, we can write that as well. With regard to some of the tougher risks, we are able to consider them. We only have a very small handful of officially excluded classes, and they are the obvious ones. Adult content, payment processors, social media, cannabis. I mean, it's the very obvious ones that we are not looking to write. But with regard to the MSP, we are able to consider, but we really would be looking at a much higher attachment point, even if the revenues for those specific services are only a portion of the overall.
Okay, thanks. The one other thing that I wanted to, I actually have two more questions, Pat, and then I'll turn it over. And I think we've probably almost run out of our time, but did want to kind of get your thoughts a little bit about uptick, likelihood of uptick of cybercrime, given sort of the Russia-Ukraine war going on. Just thought it's like a very timely subject for us to at least give a little bit of an opinion on.
Yeah, it's always a possibility. And it seems like, you know, these days, not even necessarily specific to Russia and Ukraine, but cyber attacks are becoming a more common type attack as nation states are, you know, battling on the world front. It is possible. It always, of course, depends. There's been a lot of discussion over the last couple of weeks around war exclusions. And every carrier's language is slightly different. Every claim scenario is also different. And so, you know, it depends. But, you know, it is possible that we will see an uptick in attacks, potentially utilities, you know, the grid, and other supply chain type attacks.
Thanks, Jennny. Well, one last question to answer, Laurie, going back to the SME question. Do you have a specific threshold in terms of turnover or revenue? Like how do you actually determine what sort of fits and what doesn't fit?
Sure. It really depends on the line of business. So if we're looking at lawyers professional, it really is driven by headcount, which we're looking at those attorneys and those firms with more than 25 attorneys. With regards to private company D&O, it really depends if you're buying a package. Are you buying D&O, EPL, fiduciary, where we can then get the premium level to somewhere above 25,000, then we can consider it. If there's only the interest in the D&O or the fiduciary, the EPL independently, it sometimes doesn't hit that minimum premium requirement in order for us to have the underwriter focus on those specific lines. So it really is something that is very fluid, and we're happy to discuss those situations, but really it kind of is a moving target overall. But happy to reach out, and please reach out if any further questions.
Okay, thanks, Laurie. Pat, with that, I think I will turn it back over to you. Again, thank you for having us. And if there are any additional questions, by all means, reach out to us.
Thanks very much, Lisa. And again, our most generous thanks to each of you for sharing your time and expertise with us today. It was a fascinating session, and I, for one, will be watching it again on YouTube just to make sure I caught everything. And that will do it for us today. Be sure to mark your calendar for our upcoming special 3-part series on U.S. casualty, starting March 22nd and running for 3 consecutive days at 11 a.m. Eastern. These will be brief but highly focused 30-minute discussions on casualty. And you can see from the title card that Mark's putting up the topic that will be covered each day. So you'll definitely want to check out that special series and hear the latest from industry experts. As our session ends today, please do take a moment to answer the few survey questions that will pop up in your browser, as your feedback heavily influences what content we provide in this series. You can also drop us a note anytime at usevents@lloyds.com. So until next time, let's keep staying connected. Take care and have a great rest of your day.
you.